I'd like to begin by acknowledging that we're in Mi'kma'ki, the unceded ancestral territory of the Mi'kmaq people. We also acknowledge the contribution of people of African heritage in Nova Scotia for more than 400 years. We pay tribute to and are grateful to our ancestors who came before us to make sure our history is not forgotten. And now, on behalf of the Volunteer Nova Scotia and the King's Volunteer Resource Center, welcome to Nonprofit Financial Stewardship with presenter Joel Stoddart. Joel is an experienced facilitator known for his engaging and practical approach to group learning. He's got a background in both small business and nonprofit development, and he aims to deliver training where people can walk away with confidence and knowledge. He's served on several nonprofit boards, including the Booker School, Deep Roots Music Cooperative, and the Clean Annapolis River Project. He spent many years working at the Acadia Entrepreneur Center, and now he works with the Community Business Development Corporation. He lives in the Annapolis Valley. And I'm going to turn it over to you, Joel.
Awesome. Thank you. And thanks for being here, everyone. I hope that you can hear me and I hope that you can see my slide deck. Can anybody give me a thumbs up if you can, if we have both of those boxes ticked off? That would be super. Thank you. Okay, so thank you and welcome again for being here. I'll introduce myself a little bit more formally in just a moment. This workshop is called Nonprofit Financial Stewardship. When Heather invited me to do it, I was trying to think about what the proper title is, and this is what I landed on, which is a little bit of a high-level title. This is not an accounting course, and yet this is not just a broad overview strategy course either. It's kind of somewhere in between. The idea behind this workshop is to make sure that as volunteers, particularly board member volunteers with nonprofit organizations, that everybody has some sense of what their responsibilities are, how they can go about attaining the financial know-how and wisdom that they might need to be able to carry out their duties effectively and in accordance with the law. I will say, just as a quick disclaimer, I'm not a CPA by trade. I'm not a lawyer by trade. We're not going to go too deep into, into the weeds, but I just wanted to sort of put that out there just so that everybody would kind of know where I'm coming from. So as was said in the introduction, my name is Joel. I live here in Kentville. I've worked with the Community Business Development Corporation for almost 4 years. It'll be 4 years this summer. Previous to that, I spent most of my working life in two places. One was as a business counselor, facilitator, and trainer with the Acadia Entrepreneurship Center, which is now defunct. And also, I worked at a home care agency called CareForce, which was sold, I think, 7 or 8 years ago as well. As was also mentioned, I've worked on 4 nonprofit boards, volunteered on 4 nonprofit boards, which I'll skip ahead to and then come back. I think Heather mentioned it anyway. One was the Deep Roots Music Cooperative, which anybody in the Annapolis Valley will know, and probably some folks farther afield might be familiar with. Their annual festival and a number of other events. Clean Annapolis River Project is an environmental nonprofit organization out of Annapolis Royal, which I also served on their board. And most recently, the Booker School. Some of you in the Annapolis Valley will know that the Booker School is a small independent charitable nonprofit school located in Port Williams. So I've had a variety of hands-on experiences. In addition to all of these, I've probably facilitated strategic planning and board governance planning for at least 40 or 50 different nonprofit organizations over the years through the Acadia Entrepreneurship Center. So I've seen a little bit of this and a little bit of that, and probably the good, bad, and the ugly of financial stewardship. So we'll talk a little bit about some of those lessons learned here this evening. I won't bore you with too much of my own profile. If you do, we were talking at the outset, Heather and I, about how to do the microphone, how to do questions. If anybody has any questions at any time and you want to put them in the chat box, please feel free. And also, if you feel the need to unmute yourself and ask a question that way, please go ahead. any time is good with me. So please, if I'm speaking and you need to ask a question, go ahead and cut me off. I won't be offended to do that. And as Heather said, we'll also do some Q&A at the end. I usually do this. In the interest of time, I'm not going to go around and put everybody on the spot to introduce themselves. I don't know, actually, I'm not seeing, yeah, okay, I do see the chat feature now. If you feel the need and you would like to introduce yourself in the chat function, who you are, where you're from, what nonprofit or nonprofits you're affiliated with, that would be great. Probably helpful equally for me and some of the other participants, so they'll know who you are and where you're at. And if you have any key questions that you hope to have addressed, then plunk those in there as well. And Heather, could I ask if something's coming up in the chat box and I'm not seeing it, if you wouldn't mind just cutting me off and letting me know.
Absolutely. Yeah. Now I just want to double check. Is everybody still seeing the slides? There was some comment in here that maybe not everybody was able to see them. Okay. How about you, Pat? Can you see them now?
No, I can't see them.
Okay.
Is there a button I need to push?
That's a great question. I don't know what the issue. You could try logging out and logging back in. I'm not 100% sure. I will say that it's obviously helpful to be able to see the slides, but if you can't, I still think you'll be able to follow along reasonably well.
Yeah.
I'll just say it's possible at the top of your screen, you might be in a tab that says meeting, and Zoom now has a second tab for the screen sharing. So if it didn't pop up automatically, you might see the screen in a tab up top of the Zoom window.
No, I see speaker gallery, multi-speaker, view one, that's under view. Now exit full screen. Yeah, no, I can come back out and come back in, and if not, I can just listen. That's
Sure.
fine. Yeah.
Sure. Okay.
Okay.
So I'm gonna log out there, Heather, and I'll back in. Okay.
Absolutely. Yeah.
Perfect. Okay, so here's our agenda. I'll start with a short disclaimer in a moment. And then we're going to look at 5 pillars, or what I think are 5 reasonable pillars for good nonprofit financial stewardship. Number 1 being understanding the basics. Number 2, duties of board members. Pillar number 3, key financial terminology for not-for-profit organizations. Number 4, financial policy. So we'll talk a little bit about that. And pillar number 5 is your financial governance dashboard. And I do want to start out just by saying outright that it's been my experience in all nonprofit contexts that nonprofit board volunteers vary widely in their financial background. Some people come to the table with a lot of experience, and a lot of volunteers come to the table with no experience whatsoever. And both of those things are fine. That is very normal. Everyone is not going to be a financial expert, and everyone's not going to have years of financial analysis or accounting experience behind them. That's okay. That's perfectly normal. Every board has that. And so I don't want you to feel like, too much pressure to feel like you need to know everything. We are going to talk about some of the key things, and then hopefully you'll have enough to sort of carry on from here and find out and fill in the gaps where they might exist. So my disclaimer is that it's complicated. Financial stewardship in any context can be complicated, but I would argue it's probably especially complicated in a nonprofit setting. There's lots to know, no matter how much you read and how much you learn and how much you do. It's my experience that people are always learning something new. So it's a situation you haven't run up against before, or it's some scenario that you hadn't anticipated. And it's very important that everybody takes a breath and realizes that you don't need to know everything. You do need to know how to find out everything. And there's a big difference between those two things. Okay. So let's start with understanding the basics, which is pillar 1 of good financial nonprofit stewardship. So I guess probably where I would start And this, again, this might be elementary for some folks and maybe not for others, is that it's helpful to understand four major financial statements that are associated with most nonprofit organizations. Number one is a statement of financial position, which in a business context is usually referred to as a balance sheet. Statement of operations or statement of revenues and expenditures, which the business parallel to that, I think, would be the income statement. Statement of changes in net assets and statement of changes, statement of cash flows. So what are those things? I was trying to do this myself and then realized it would be easier. ChatGPT would probably do it more neatly and tidily than I could. And I was right, it did. So I prepared this little table, or ChatGPT prepared this little table with my prompting. And it really sort of compares or sort of outlines, I should say, what these four different statements are and what they aim to do. Now, I'm not going to go through each column here or anything like that. You can feel free to pick out any questions that you might have, but I am going to stick to the far right column and the far left column. So the financial statement of financial position, answers the question, how strong are we financially right now? So if you're a volunteer on a nonprofit board, you should always have access and have reasonable understanding of how strong are we financially right now. What do we own? What do we owe? What are our assets and what are our liabilities at any specific point in time? Statement of operations is, did we operate within our means? Usually statement of operations are annual. You might be, for whatever purposes, you might be doing this on a monthly basis or quarterly basis or whatever. But this is sort of your income statement, so to speak, which is how did we do over a certain period of time? Do we bring in more than we put out or vice versa? Statement of changes in net assets is taking the first two and putting them together and connecting the dots, figuring out, did our financial position improve or did it weaken over this particular period of time? And the statement of cash flows is the thing that's probably on most people's minds most of the time when you're in a nonprofit setting is, can we pay our bills? Do we have enough money in the account to pay payroll or program expenses or whatever might happen to be the case? So each one of these has its own unique purpose. And you don't need to be an expert in these, but it is helpful to have some literacy with these four financial statements. My recommendation is usually that if you're taking a role in a nonprofit board, is that you spend a couple of hours or half a day or whatever it might be and find a course, it's a virtual course or otherwise, that can give you a primer on these financial statements and just sort of become familiar and become comfortable with picking them up and kind of looking at them and saying, okay, this is not foreign to me. I kind of understand what these are doing. I might not know all the intricacies, but at least I understand what I'm looking at in a broad sense. Okay. So I'll do number two, and then I'll pause and we can take some questions. And if you have any questions in the meantime, you can always plunk them in the chat feature. So what are your duties as it relates specifically? I mean, board members of nonprofits have a lot of duties, but in a specifically financial context, you actually have a lot of duties and responsibilities. I'm sorry to have to tell you that you have a lot of duties and responsibilities, but those are sort of the breaks. So let's go through some of them. Let's see. Okay. Number one, you've probably all heard this terminology before. You have to act as fiduciaries of the organization. You have a duty of care, a duty of loyalty, and a duty of obedience. So the duty of care is to act in good faith at all times as it relates to the financial affairs and other affairs of your organization. Your duty of loyalty is to act always in the best interest of your organization and put your nonprofit's interests above your own or above any other competing interests that might come to the table. We'll talk a little bit about conflict of interests a little bit later on. And you have a duty of obedience. The duty of obedience is to make sure that you are upholding all of the responsibilities that the Canada Revenue Agency and other laws expect of you. So you have that. You also have to ensure that legal and regulatory compliances are met at all times. So this could be payroll remittances, this could be tax returns, this could be HST, this could be a whole number of other things. You do not need to be the expert in all of these remittances and all that kind of stuff, but it is well advised that you have somebody on your team who is an expert, or that you know who to call to get these things done and make sure that they are getting done. Unfortunately, as some nonprofits find out the hard way, ignorance of responsibilities is not a useful excuse for the CRA. They're not interested that you didn't know that you had to do a certain thing. What they are interested in is that you did it or you didn't do it. And I hate to, that sounds like very fear-mongering kind of language, and I apologize for that, but that is kind of the reality that we find ourselves in. The third duty of board members is to approve and oversee the annual budget. Most boards of a certain size, if the organization is of a certain size, will have a finance committee who usually creates a budget, or your executive director or whoever the lead is in your organization quite often creates that budget. It is your job as a board member to approve that budget whenever it hits the table at a board meeting or what have you. So again, you don't need to necessarily be the one who pours over all the numbers, but you do need to make sure that the people doing that are fit to do that. And it is your vote that will ultimately decide whether that budget gets approved or whether it doesn't. Number 4, to monitor the financial performance and statements regularly. Everybody's definition of regularly varies. Your mileage will vary on that. Some nonprofits review financial performance every board meeting. Some of them get around to it once a quarter. Sometimes, unfortunately, some don't really get around to it until it's AGM time, and then they are scrambling to try and piece it all together. I'm not going to judge that. I mean, I think it's better generally the more that you can do it. But it is a responsibility of the board to monitor the financial performance and to make sure that if things are moving sideways in a way that you might not want them to be, that you catch that very early and you can sort of remediate as necessary. Establish, review financial policy. A lot of people's eyes glaze over at policy. I can't think of a thing that more people probably find more boring than establishing financial policy for a nonprofit organization. I actually kind of like it, oddly, but it's not everybody's cup of tea. But it is part of your duty to make sure that those policies are set and that they are reviewed on some kind of basis. That can be every couple of years. You don't have to do that all the time. If you set them up right in the beginning and take the time when you're establishing financial policy to make sure that they are done well, that's good, because then that means you probably don't have to review them all that often. They are there and you can lean on them when you need them. We're going to look at financial policies, key financial policies, in just a little while, so I don't want to say too much about that now. And to determine the appropriate level of external financial review. Some of you are familiar with the terms audit, review, or compilation. And what this means is that when it comes to reporting your financial performance to members or otherwise, there are different levels of review that you can get. And we're not going to go through them in any immense detail, except to say that there are 3 main ones. One is a notice to reader. The other 2 are review engagements, and the third one is an audit. Basically, these go from small, medium, and large, good, better, and best. The notice to reader, if you skip down to the very, very bottom line here, it says, what's the typical use? Who typically uses this? Very small and low risk nonprofit organizations. Most small organizations don't have $20,000 to pay someone to audit their organization. And in most cases, it's not necessary in the first place. You might just be small and starting out, and maybe you don't even have paid staff or anything like that. So it's kind of overkill to pay for an audit. You can if you want to. Once the price tag comes in, most organizations that are really small decide out of necessity, if nothing else, that they're not going to do that. But you can. And a review engagement is sort of the medium, which is growing or moderate risk or organizations. There's some other, this is kind of a useful table, I think, to sort of get a quick lay of the land in terms of what these are. I'm sure if there was an accountant among us tonight, they would probably scoff at me and say there's a lot more to it than this, and we should spend all of our time talking about it. And perhaps they're right. But for the sake of this workshop, we're just going to sort of snapshot it here. Okay, so a few other duties that you have. Okay. Monitor cash flow, understand timing of cash flows. That kind of goes part and parcel with reviewing your financial statements and that sort of thing. Identifying major financial risks. This is something you'll want to do that's not really related to a financial statement so much as it is a knowledge of the organization that you're working in. So what are the risks? Well, the risks typically in a nonprofit organization is that you're too reliant on one funder. A funder that wanted to fund you doesn't want to fund you anymore. And I guess we probably just heard about this the other day with some of the museums and stuff across the province, is that there's an over-reliance on any one particular funder can be a huge risk. Shifting government priorities, again, out of your control as a nonprofit organization. Sometimes that works in your favor. Sometimes the government's priorities of the day skew in your favor and come over to where you are, which is great. But sometimes they also shift away. So you kind of have to have contingency plans in case that happens, or try your best to do that. So there's all kinds of risks that you can face, financially speaking. Avoid financial conflicts of interest. This is, again, I'm not a lawyer. I'm not going to pretend to speak for the legal profession, but it does come to pass sometimes that nonprofit board members run into conflicts of interest with their organization. A decision that you might be making as a nonprofit organization might benefit somebody else's private interest or something like that. It doesn't happen all the time, but you do need a policy around it. And we'll talk a little bit about that a little bit more. But you do want to avoid that. You don't want to be down the road and somebody calls you out and says, well, Heather should have abstained from this vote because clearly Heather has two hats on in this particular issue, and then it's hard to correct retroactively. So review and approve financial statements. This is board and membership if you're a member-based organization. Then we get into ensure the executive director has financial competence. Some of you surely are probably in organizations that don't have an executive director or not a paid one. That's fine. If you do have an executive director, one of the things you will want to make sure of is that they have a basic financial literacy. They don't need to be an accountant. They don't need to be the knower of all things, but they do need to be able to pick up those financial statements and be able to sort of make sense of them. Prevent misuse, loss, or fraud. Again, if you pay attention to the news every now and again, once every 8 months or so, you hear some story about a nonprofit that was scammed out of finances because a whole bunch of people sitting around the table didn't know what they were reading and didn't know what they were looking for or meant to be looking for. And some sly person who recognized that, took advantage of them, and unfortunately ran off with the funds or spent the funds or that kind of thing. So So that's obviously a situation you don't want to be in. Ensure transparency, and if anything else stands out from this slide, let it be this: ask lots of questions. If you are sitting around the table with a group of people in your nonprofit organization who are having a financial discussion and you don't understand what they're talking about, first of all, don't feel ashamed of that. And B, do speak up and ask lots of questions. The only way that most of us get better at the whole financial thing is by, at some point, asking questions about something we don't really know about. I've had to do this a million times, and I'm not afraid to do it. And I hope that you won't be either, because that's how we learn about what's going on in our organizations, and it's how we improve. Okay, that's a whole lot to digest. I'm gonna stop there for a minute and be quiet and see if anybody has any questions.
There's nothing, the one that's been in the chat is just, everybody's going to get a copy of the slides that wants it, right? So,
Sure, yep.
yeah.
Yep.
And we'll put the recording on the website, so.
Perfect.
Yeah.
Yep, that's great. I will add, just as a bit of a side note, is that, and I know everybody has their feelings and thoughts about AI and how that should be used or could be used and all that kind of stuff, but if you could train yourself in most of this stuff by asking the right questions. ChatGPT is pretty good at, I'm not suggesting you need to make your whole financial policy for your organization using ChatGPT, but if you have questions, if there are terminologies that come up that you don't know, ask ChatGPT and it will give you a pretty good answer. And don't be afraid to do that, because there's a lot to know. So let's talk about, sorry, this is the second workshop I've done today, and after 2 weeks of having a cold, my voice is a little bit cracky, so I do apologize for that. So let's talk about some key financial terminology that you might hear in and around nonprofit circles. So one of the things you might hear sometimes is you might hear restricted versus unrestricted funds versus internally restricted funds. I have a table on the next slide, but generally speaking, nonprofits of a certain size get to a point where they might restrict funds for various reasons, or they might have funds be restricted on them for various reasons. If your funder gives you a bunch of money to run a program, and then they decide, well, we don't want them going and spending that on, advertising or some other unrelated thing. So the table looks like this. I don't know if you can see that all that well, but so there's unrestricted, internally restricted, or externally restricted. Unrestricted funds are funds we can kind of use for the general management and operation of the organization that we're running. Externally restricted are, like I said a minute ago, you might have a donor or a funder who says, I'll give you X amount of money to do XYZ thing or run this program that everybody loves, but we need proof that you're spending this money on that thing, and here's all the details. So make sure that you comply with that. And internally restricted is kind of like your own, it's kind of your own checks and balances on the way that your organization uses your money. Like you might set a policy with your nonprofit group that says, we want 3 months of operating funds to be available at all times, so that if things go completely sideways and we lose a major funder or something like that, that at least we've got 3 months of runway to give ourselves the space to keep going until we sort something out. You don't have to do that in most cases, but a lot of nonprofits do, and I think it's a wise thing to do. So this, yes, go ahead.
Lori, how many people should actually be able to access the bank account or the funds?
That's a great question. Usually, I don't know that there's a solid rule for that. I think that generally fewer is better. Usually with that sort of thing, there's a couple of people, the treasurer and executive director, or the people that really sort of need access to it on some kind of a regular basis. I guess my best answer to that at this point would be the fewer the better, but not to the point where it constrains you from managing the day-to-day operation of the organization. What you don't want to do is constantly be having to drive across county lines to get somebody to do something trivial that really could have just been done. If you just opened up the financial authority to do that. It's funny you asked that. I was in a workshop yesterday about cybersecurity for financial transactions, and it was kind of terrifying. And we hear more and more about scams and phishing and all this kind of stuff, and it really is a big issue. So on top of being, having the right people have access to the organization's bank account, you also, on top of that, probably want to put some cybersecurity measures in place. If you're doing, if you're sending $50 here and there, I don't think anybody's going to worry about it. But if you're a large budget organization, it becomes a really big deal really quickly. Oh, sorry. All right, let's come back to this. So cash versus accrual accounting. Let's talk a little bit about that. Most nonprofits that are starting out and have very little cash and have no paid employees and not many assets, and they're just sort of trying to get off the ground, they are usually fine with cash accounting. That's not universally true, but it's quite often the case. Most organizations eventually, the majority of nonprofit organizations of any size or scope move over to accrual accounting. When they do, the question is, well, when exactly do you switch? There's no hard and fast rule that says thou must switch at, such and such a time. But some general rules of thumb or guidance would be, when you start receiving restricted funding or multi-year funding, you're probably going to want to switch over. Cash accounting makes finances look healthier than they are when the funds arrive early. So you really want to start, to paint an accurate picture of what's going on in your organization when you get this funding. You really want to start recognizing the revenue when it's earned, as opposed to just when you get a lump sum of cash through the door. When you have employees or significant payroll, accrual accounting matches payroll expenses to the period that's worked. When your organization is growing, one source I found said if your annual budget is over $250K is a good time to do it. My personal opinion is probably a little bit less than that. But again, ask 5 different people and get 5 different opinions, I suppose. Multiple programs, more funders. Basically, this is a complicated way of saying the more complex your organization gets, the more quickly you're going to want to move to accrual from cash. When the board's asking better questions, how strong are our reserves? What does each of our programs actually cost? That would be another good time to move over to accrual accounting. And you require or anticipate an audit or review. An audit or review will require you to have accrual accounting. And so notice to reader, I don't think requires that, but an audit or a review will require that. I'm probably not doing entire justice to that. But that's in broad strokes when you should consider accrual accounting as opposed to cash accounting. And I don't know all of your organizations. I don't know where you're at in terms of size or scope. But if you're just processing some basic expenses here and there at this point, then cash will probably just do you fine. All right, so what else do we have? We have T3010. I don't know how many registered charities, if any, we have in the room. Maybe we have a bunch. I'm not sure. If you are, you will know that you have a T3010 form to fill out every year. Your T3010 is your registered charity information return. So it's an annual public filing, which kind of, I don't know, I've accessed some of these. This is public domain, so anyone can research these online if they want to do the work. They're required by all registered charities detailing their finances, governance, and activities. So there is a little bit of an extra burden there. A lot of if you're not a if you're not a registered charity, you don't have to do that. That's an extra step that registered charities will have to do. Some of the other terminology, fund accounting is another accounting practice and another accounting method that tracks resources according to purpose or restriction rather than surplus or loss. When I was with the Acadia Entrepreneurship Center, I think our annual budget approached probably at its peak, maybe $2 million a year or something like that, or thereabout. And we had a whole variety of different programs that we were doing, a whole bunch of funders, giving us funds for this or that. And fund accounting is basically a way to basically not just track your organization as a whole, but track the viability and resources allocated and used by various programs that you're doing. So if you get to that point where you want to zone in or home in and you want to figure out what programs are we doing that are lagging or what ones are great and what ones are at risk and all that kind of stuff, fund accounting is a method for doing that. Deferred revenue is another term you'll hear sometimes. Deferred revenue is funds received in advance that cannot yet be recognized as revenue. So you might get a 2-year contribution agreement from some government department to do this big, awesome thing. And they might be sending you a bunch of money now that is intended to last you for a whole bunch of months or maybe span even a little bit longer. And deferred revenue is the financial way of making sure that your financial statements reflect that you didn't just get $200,000 this year, that this is actually going to be, this is expected to last you the duration of whatever that agreement might have been. Net assets, the residual interest in the organization's assets after liabilities. A lot of not-for-profits don't have a lot of assets necessarily. Nonprofits aren't necessarily set up to do that and accumulate a bunch of assets. Some do. Like the Booker School, for example, has a building. Other organizations might have vehicles or buildings or stuff like that. Most nonprofits, in my experience, especially smaller ones, have limited tangible assets. Except the cash that they've been able to keep and stuff like that. Operating reserve is board designated funds set aside to manage risk. We talked about that a minute ago. These sort of these reserve funds that you're going to want to try and keep and try and build up. It's very hard to do this as a not-for-profit organization because nobody really wants to give you extra money to squirrel away and put aside. But if you can, and you're doing different projects and different programs, and you can build in even a little bit that you can put towards, your operating reserve, whether it's 2% or 3% or 5%, try and do that because nothing's worse than being, getting funding pulled or losing a contract that you expected to get and then not having any operating reserve. And segregation of duties, you might hear this, is internal control principle separating financial responsibilities to reduce fraud or risk. So like we talked about a minute ago, you want multiple signing authorities, you want segregation of duties, so that people are, you're not entrusting one person to do all kinds of financial stuff. It's great. Probably you trust them. Probably they're wonderful people. Probably they're honest and they'll just do it. But if they don't do it, you can create quite a bit of difficulty for your organization. Okay.
We have another comment.
Go ahead.
Yeah.
Sorry. Yeah, go ahead.
So Jackie just kind of noted that being part of a small community hall, the issue of audits and what type of overview we need is a question I've had. And she thought that the notice to read, the information about the notice to reader is helpful. But I guess, yeah, when you look at something like that, especially where you do have a community hall, you're probably collecting assets and you're building that. So,
yep.
So
yeah, I think, sorry, go ahead.
No, you go ahead. Yeah, interrupt.
Well, yeah, I think, in that, I don't know the ins and outs of that particular arrangement or who owns what or who owns the hall or anything like that. But certainly, the larger you get, the farther up that scale you're going to want to go. Notice to reader, I don't want, let's see if I can switch back. I don't want to go too far back. And where are we here? Let's see. Yeah, okay. I mean, if you look down, a notice to reader isn't a lot. I mean, a notice to reader is we gave our box full of receipts to an accountant. They didn't go through any particularly rigorous process to verify that A, this is accurate, or B, that this is complete. So you might have missed a bunch of stuff. They're not going to go digging in your organization to find out if you missed stuff. So it doesn't, I mean, if you have financial folks in-house that you really trust that are on top of this and doing their due diligence, a notice to reader can be great. If it's a little bit iffy, a notice to reader is really just a statement that says, you know, we've reviewed everything that you've given us, and we've put together these financial statements based on the totality of what we've got. But it's not putting the accountant is not stamping their seal of, you know, accountability, you know, if you somehow misled them or you somehow, you know, gave them incomplete information. So it's good. It's better than nothing, but it's not going to necessarily take you the whole way. And, you know, the short answer to the question is, if you're not sure which one you need, talk to an accountant. Hopefully the accountant won't try to upsell you to the most expensive version. And I think most accountants wouldn't do that. Most accountants I've had a chance to work with are pretty honest and community oriented and would like to see you get what you need and no more than that. So financial policies, I have to tell you, just for pure entertainment and curiosity and really nothing else, earlier today, I went into ChatGPT, which I use for various other functions, and I asked ChatGPT to prepare me an entire financial policy manual for a mid-sized nonprofit organization located in Nova Scotia, that covers off all the key policies that a nonprofit would want to have. And by and large, I got, you know, numerous pages of financial policies. I'm not arguing that you should do that necessarily, but if you're looking for a place to start and you don't know what you don't know and you don't know what questions to ask, that can be really helpful. And you should always review that. ChatGPT is not going to know what's right for my particular organization or circumstance, but it is going to put forward some basic standard boilerplate policies, and you're going to look at them and you're going to go, oh, okay, well, it recommended 6 months, but I happen to know we need to do this every 3 months. Okay, fine. We'll change that and we'll make it our own. Alternatively, if you're among a good network of not-for-profits and you happen to know somebody or an organization that has good financial policies, ask them if you can borrow them. I mean, this is not necessarily, I mean, they may or may not share it with you, but I find the hardest thing for most nonprofits is starting from scratch and just kind of with that blank sheet of like, where do we go and what do we do? So if you need to start with somebody else's policies to kind of get jump started, or if you need ChatGPT or whatever, that can be a helpful way to kind of get through what is quite often boring, let's be honest, for a lot of nonprofits.
Yeah, it's good to mention though, too, that they shouldn't put anything specific to their organization into ChatGPT.
Right. That's right.
Yeah, keep that out, but it's good for general information.
Yeah. And when I did this earlier, I just basically, I put nothing in. I didn't even specify what kind of not-for-profit it was. I just said, here, I'm starting a not-for-profit. I don't know what I'm doing. Help. Give me some financial policies, and it produced something pretty reasonably strong that I would need to customize to my nonprofit, but which would accelerate the process, if nothing else. So we talked a little bit about segregation of duties, signing authorities, and delegation. You'll need a policy around operating reserves and conditions for use. So if you have those operating reserves, how much do you need and what are the conditions under which we can dip into that fund? You'll need to specify that so that everybody knows when the time comes and somebody at the board table says, well, we need to dip into operating funds because we need money. And somebody else points out, no, we're not going to use it because look at our policies. We only use it for A, B, C, D, or E. Board approval requirements for spending. So this is common. Every not-for-profit is going to want a policy around who can spend how much and when and without what permission. You don't want a rogue person in your organization spending $10,000 without discussing this with anybody else. You'll have to decide what that threshold is. For some organizations, we need co-signers or a board approval for $500. For others, it's 5,000. You'll be the judge of that depending on your circumstances. What are acceptable funding sources is a good policy that you might want to explore. I'll give you a concrete example of this. Years ago, I'm going to say this is probably around 2010, when I was on the board of the Clean Annapolis River project, an interesting scenario presented itself. And the scenario was that Shell decided that they wanted to pump a bunch of money into environmental not-for-profit organizations, which I'm not sure if they still do or don't. It's neither here nor there. But there was quite a robust and ongoing discussion around the board table about whether that was acceptable money to take, as there were arguments for and against whether that was in stark contrast to the organization's mission or whether it wasn't. And at the time, we didn't have any policy around this. We just had to make it up as we went along because this particular scenario had never presented itself. But I think it is good to have some terms of reference that you can fall back on that says we don't necessarily just take money from anyone who wants to offer it, tempting though it might be. And here are the stipulations that we go through or the procedure we go through to make a decision about that. In the end, spoiler alert, we did take we did take the grant money from Shell. Whether that was the right decision or not, somebody else will have to decide. But anyway, it's a good policy to have. Restricted funds, policies around restricted funds, policies around expense approval and reimbursement. How can board members be reimbursed for travel? How much can they be reimbursed for travel? Do they need pre-approval for travel? If somebody wants to go to a conference in Alberta for a not-for-profit convention or something, what has to happen? What set of procedures need to take place, if any, in order for that to happen? So that's a good policy. Travel policy, conflict of interest policy that defines when someone is in a conflict of interest and what they are to do if they find themselves in a conflict of interest. Thresholds for review and audit. So you can set your own policies for this. When we get to this size of annual budget, we're going to step it up and we're going to have a review or we're going to do an audit. And the reporting frequency. So how often do we report on financial matters? So all of this, I'm sure, is like watching paint dry for some of you out there. It's not the most exciting stuff necessarily, but I can't emphasize enough how doing a lot of this stuff up front can save you a whole mountain of challenge later on down the road when you run into particular issues. Because there's nothing worse than running into an issue like that calls upon one of these policies and you not having a policy. And suddenly everyone's scrambling on the spot trying to figure out what it would be. So that's financial policy. Any questions or comments about that?
Yes, I did have a question.
Sure.
Yeah, let me see. I just posted it in the chat. What are the most important policies from this list from your perspective for a new or young organization? Because that's quite a number of policies, which all seem very
Yes.
important, but just if in terms of prioritizing, if you have any suggestions.
Yeah, that's a good question. I mean, I think that some of these pertain more to larger organizations, but I do think that signing authorities, banking authorities, these, as soon as you set up any kind of banking method for your organization, whenever you get there, you will need to make decisions about who can sign, what authorities they have, who can spend what amount of money. That basically pertains to every nonprofit, big or small. So that's probably where I would start. Restricted funds is great, but again, if you're starting out, you're just usually not at that point yet. So I think it usually pertains to making sure that due diligence is done around who has authority and who doesn't, and who needs to be around the table when a decision is being made around spending, whatever that spending might be. And who can, who can approve, does it require, what kind of board vote does it require if you get offered to do a new program or a new project that comes your way? So those are the kinds of things I would focus on. Somebody else might have a different answer than that, but I think that's where I would start. Just looking to see if there's anything else that jumps out at me. And your point is a very good one, and it's very well taken that this is a lot. I do a different workshop, which I think I've done for this organization, around how to start a nonprofit in 5 easy steps. And these kind of dovetail together a little bit, because my encouragement when somebody wants to start a nonprofit or really take it from the very, very early stages to grow it, I think it's a great test of commitment from the people around the table to see how much time they're willing to put in to forming bylaws, forming policies, that kind of stuff. Boring as it may be, I think it says a lot about, sometimes it can be a very small group of people, and that's fine, but that's kind of a test to see how serious everyone is around putting real guardrails and real structure around the organization. And sometimes it can reveal itself fairly quickly that, you have a core of people who are willing to do it and set it up all up front. And sometimes it reveals that some folks, are interested in the organization and its outcomes and all that, but they may not be interested in volunteering for all of this stuff. Like, maybe this isn't why they got involved in an organization. Maybe I just want to go serve meals or, whatever it is you might be doing. And I don't want to bore myself with financial policy, but find those people. You do need at least a few people who are willing to devote some attention to some of these things. Okay. I know I'm coming up on our 8 o'clock break. I know I can carry this last slide. And that should just get us right to 8 o'clock. So all of this is a lot of stuff. I don't mean to make it sound easy. It's not. It can be complicated. It can be boring. But what I would say is that you owe it to yourself, probably, and you owe it to your not-for-profit, particularly if you're on the board, to make sure that you continue to try and improve your understanding of the whole financial landscape of what you're doing. It takes forever. It takes a lot of time. But what I often encourage people to do is to create what I call their financial oversight dashboard. And rather than, there's nothing often more intimidating, even if you read a lot of financials, to arrive at a board meeting and have somebody plunk down a stapled document of 7 pages of financial stuff in front of you and expect you to just kind of look at it and go, oh yeah, well this is that, and we need to understand it. So I like setting people up or encouraging them to set up a dashboard which is basically a way of saying, I don't want to read everything, but I want to pick out the 9 or 10 measurements that I can look at a glance that tells me how we're doing. You'll have to decide, what some of those things are and what you want to know. But so you might want to know things like months of cash on hand or operating reserve ratio. So you might want every board meeting for somebody to report on how many months of cash on hand do we have? If things went sideways, how long could we do this? Your current ratio in business is your current assets in proportion to your current liabilities. So that tells you a lot about how solvent you are. If you have current assets of $1,000 and current liabilities of $10,000, these are both short-term measures. That's going to be a real problem real fast, and your current ratio can kind of tell you what that is. And if you can look at that over time, you'll see where you're going. How much so another way to look at that is working capital. How much current assets do you have over your current liabilities? Your cash burn rate is, again, you don't need to do this, but this is just how much cash does this organization typically go through in a month. If you're starting, you won't know that yet because there aren't enough months on record to really be able to have any measure for that. But as you go along, you might want to measure that. Your unrestricted net assets ratio. So that's your unrestricted net assets in proportion to your total expenses. Your net asset trend. So you might want quarterly or annually to have a review or a report that just doesn't give you the whole thing, but it tells you in which direction your net asset total is going in. Your debt to asset ratio. How much debt do we have compared to how much assets we have? Your revenue concentration ratio, which is basically a way of saying, how much the revenue concentration ratio is basically what proportion of our money that comes from our largest source of funding in proportion to all of our funding. So the higher this ratio is, the worse it is, because if your revenue concentration ratio is 90%, what that would effectively mean is that 90% of all of your organization's money comes from one source. And that's good. I mean, it's good that you're getting money, but it's not good that you have all of your eggs in that one basket. The same goes for grant dependency ratio. So a lot of not-for-profits will measure what proportion of our total revenue is from grants. And they'll look at this over time to see if it's going up, to see if it's going down. In a perfect world, it goes down. The nature of not-for-profits doesn't usually allow for that, but the more it goes up, the more you're dependent on grants for survival. And the same goes for program expense ratio and administration cost ratio. If you spend a lot of time in the not-for-profit world, and especially with registered charities, every now and again in the news, you'll see some report about some not-for-profit or charity that spends a wildly disproportionate amount of all of its money on administrative expenses, like big salaries or basically stuff that you might not want them to be spending it on if you were a donor to that organization. So you're not going to be doing that because you're all wonderful people. But if you want to know whether your program expenses and administrative expenses are going up as a proportion of your entire expenses, that's a good little metric to sort of track as well. And then your budget variances, which is, month to month, were we over budget, were we under budget? So it'll take some time to organize this, but if you can have somebody coming to your meetings and they can report on these things and these things only, that can save you from having to constantly read through pages and pages of financial statements to try and sort it all out, because you'll have these little numbers, these little measures that you get every quarter or every 6 months or whatever that are telling you what direction you're going in. Whew. Okay, that's a lot. I'm at 8 o'clock. I don't know, Heather, if you want to take a break now and then we'll come back and
Yeah, and then
take some
we've
questions.
got a question when we come back. So
Okay, perfect.
Okay.
Everybody take a water break and we'll be right back. So I
So
see
we
there is sorry, go
Okay.
ahead.
Couple of questions. Yeah. Okay.
So I see one question. I'm probably, maybe I'm missing one, but I see one here. How can you find and get a call back from an accounting firm to work with your nonprofit? I've tried multiple firms in the Valley with no calls returned. That's a great question. I'm very sorry to hear that and kind of a little bit surprised to hear that as well. I know some accounting firms probably do a little bit more work with nonprofits than others. I mean, I don't know who you've called or not gotten a response from, but that is disappointing to hear. I don't know what would be behind that. But if they're not calling you back, they're probably not the right people to rely on, I would say. Was there another question there, Heather, as well? I'm sorry, I'm just trying to scan in real time.
It looks like Jackie can't hear us. Jackie, can you hear us now? I'm not sure what that would be. Um, Jackie, are you here? Okay, well, I guess we'll just keep going.
Okay.
Okay.
So I guess I'll underscore a couple of things. First, I know how overwhelming this all is or can be. Um, there's a lot to know and there's a lot to do, and there's a lot of people telling you, well, you have to do this and you have to do that. And take it step by step. But at the end of the day, there is still no getting around it. Several people within your organization have to have, and at least one person absolutely has to have financial acumen to be able to oversee these things. You can find yourself in difficulty quickly, not because you're not doing great work, not because you're not, supporting the right cause or anything like that, just because finances can get complicated. And a lot of not-for-profit organizations, or almost all small and medium size, they don't have somebody in-house that does all this stuff. I mean, they have most people, they have either someone on the board or a couple people on the board with serious financial literacy, but they know who to call. They have somebody, whether it's an accounting firm or, somebody who's a retired accountant or somebody who's kind of, there when they need them. As you might not be surprised to hear that accountants are in high demand when people go recruiting for board members. Somebody around the table goes, yeah, who wants to be the lawyer on our board and who wants to be the accountant on our board, so that we have those kind of baked into the pie. If you can get them, great. Sorry, I'm just trying to follow the chat box here too. I'm not sure if everybody can hear me or nobody can hear me, or if I'm
I think it's just one person. I can hear you fine, and I think Carla
Okay.
can as well. Yeah.
okay.
So it's just Jackie. She's having trouble. So maybe if she logs back in. Anyway, sorry to interrupt,
Okay,
Joe.
it's good to know. At least I'm not talking into the ether. That has happened to me before. It has been my fault, so wouldn't be the first time. And as I also said, ask a lot of questions. Questions are your friend, whether you ask them around the board table or you ask them, to chat GPT or whatever have you. There's a lot of terms, there's a lot of things to know. And I guess the third thing I would underscore is the more that you can do up front, which I know is boring, which I know you want to focus more on your mission and your purpose and your cause and all of that. The more of this you can do up front and agree on, the better. Because I think the other thing I didn't really mention is that one of the things you run into when you start setting financial policy is that you suddenly find out that what you assumed everybody agreed on, everybody does not agree on. Um, it's not universal, but it does happen. It's kind of like a business partnership without a partnership agreement, which is that we'll be fine. We'll work things out. It'll be great. We like each other. We're friends. And then you get a couple of years down the road and an issue comes up, and then you don't really have any of that scaffolding to sort of fall back on. And so I do encourage people to do that up front to the best of their ability. Are there any other questions? I mean, those were the majority of my slides. I mean, I can go back and talk about some of these things in a little more detail if anybody needs me to. But that was the majority of slides, and I'll stay and take as many questions as you have.